and you're only selling 60 or 70, why are you buying more cars? Now, no, there's reasonings behind this that you can give yourself excuses on of the cars. I always got 30 or 40 cars in transportation and tied up in service and so forth. But again, that could be truthful in your situation, but not a reason why you still can't carry 100, sell 100. You don't need 150 to sell 100. Okay, so if you're not selling what you're currently carrying, why are you still out there buying? Now, I also want to say, I do agree. And part of what I put in here is, they're saying to always be a buyer, or your gross is made on your purchase and things like that. And so, yes, you always want to have the ability to be a buyer in current market in current market situations. So, and you always want to be a buyer, not necessarily to retail cars, but possibly even to wholesale these cars. So even though your retail numbers are slowing down, if you have an exit strategy on being able to wholesale the car or get another avenue to get rid of the car, again, acquire what you can, because that's successful. But here's the thing. So when I'm going to be talking about our retail strategy. If you have a buying center that's buying 50, 100, 200 cars a month, and you're wholesaling 80%, keeping the good stuff, and you're making money there, keep doing that. Believe me, that's not what I'm talking about. Most dealers are not in that position. And so what I'm looking at is what we're carrying retail, and let's especially look at what we're carrying retail in our purchases, not just our inventory as a whole. Okay, I could be selling 100% of my inventory and trending that way, but if my purchases are slowing down, I need to also slow down my purchases. I want to first start with a market report and kind of tell you of the reason why I brought this up. And I'm going to share some screens here. So if you're listening to the podcast, go ahead and get on Facebook or YouTube to kind of see these charts. And let me go ahead and share our LinkedIn. Now, the first thing I'm going to show you here is Shopper Index. I've gone over this before. I'm also going to show you, this is Google Trends, people looking for used cars. Now, I started at the beginning of January of last year to show you the shopper pattern that happens typically every year, and what happened last year and what's going to happen this year. Because again, it just trends out that way. I'm looking nationally now, but that's how the market's going. So you look at January 1st of last year, 2024, the tax season, the shopper index peaks. Then it drops down through April and May and going into the spring season. Then it builds up a little bit and going into the July, August sales events. That's summer sales events, summer sales-a-thon, so forth. But it peaked then on August 17th. And the week of the 11th through 17th, which is the current week we're in right now. But from there on, it just drops down all the way through November and December, picks back up in tax season, February, March, drops back down through the spring for this year, which it did. And then again, it picked up, but it picked up early this year. I think it had a lot to do with kind of this whole tariff scare and things like that. And so we get this uptick in early July shopper index, but then it drops back off. So right now, on a scale of 100, people look for used cars is at 91. And if you look at this time last year, is at 90. Okay, but what happened after this, right? School just started. Today's the first full day of school for my kids. So, if I'm going to be buying anything, big purchases, all this kind of stuff, let's get all that done before we're getting shuffled into school and all these other activities. So that's life. Now, I want to compare that also to our dealers' volume, okay? And we look at, again, let's take it, what I'm looking at here is year over year. Red is shopper index. Green is our dealers' 2-week sales percentages. Again, I want dealers to sell half their inventory in 2 weeks. That's what I track. So I want to sell 50% in 2 weeks. And then that way it puts you on pace to sell 100% in 4 weeks. Again, if we look at last year, as that shopper index went up in tax seasons, our dealers' volume went up with it. And then it slowed down through July, August, and it picked up in July right after the 4th of July holiday. And then after that, the sales volume just really dropped off. And you look at September 17th. And again, we're looking at 2 week sales cycle. So September 17th is 14 days ago, would have been September 3rd, is kind of by the time it bottled out. So we got about 2 weeks away from September 3rd, right? So again, this year we increased in March. It dropped down through the spring, and then our dealers volume went back up. But here's the kicker. Last year's dealers volume peaked out at 50 plus percent. Our dealers were selling 100% of their inventory in that summer sales events. And right now it's only at 47%. We have, and the shopper index is starting to drop off. Matter of fact, I have the data up here. So our dealers' actual volume, if you looked at this week, that was the 5th. But if you look at this week, the volume has actually dropped. The 2 weeks sold went from 47% down to 46%. Well, why did that happen? Because again, the shopper count already started dropping by mid-July. Okay. Average age of cars was going up. It started dropping because again, we started having some volume. You'll see the average age of retail out there on the retail drop a little bit over the next couple of weeks, and it's going to shoot right back up just like it did last year. It dropped off as we sold cars from July, and that black line you can see built back up by October because things slowed down for our dealers. And just to give you another insight of that, because I talked about it for years, there's no shortage. There's no shortage of used cars. People thought I was crazy. But if you look at, again, this is coming from Black Book. If you look at used retail listings volume, the black line indicates 2025. As of now, we have the highest used car volume listing index that we'd have comparably to the years. I bring that up because, again, the shopper activity typically is year over year. If I look at the 5-year period, our shopper activity is lower than any 5 years. Let's look at that real quick. Remember, the inventory levels is as higher than it was in the 2019, 2020, 21, 22, 23, 24, 25 inventory retail listings is higher. Okay. We also track that in here. When I look at the market view, I'm looking at how many used cars listed nationwide, 1.3 and 1.1 on AutoTraderandCars.com, and it's 1.4 and 1.2. There's 100,000 more used cars than last year. But also, I go back to a 5-year period of shopper index. If you look at over that 5-year period, remember, we have more cars now than we have in the last 5 years. But if you look at a 5-year period, where the shopper index looking for used cars is at a 59. Where was it last year? This time it was a 58. Where was it this time 2 years ago? As a 65. Where was it 4 years ago? Or 3 years ago? It was a 67. Where was it 4 years ago? At this time, it was at an 76 and 82. Okay, 82 shopper index out of 100 to a 58, and we have more cars than we did back then. So, anyways, I always said there's only a shortage if there is less supply with more demand than supply. Okay, and the demand's just not there. Now, interest rates can go down and things come in. So my point is, let's go back about purchasing cars. One of the things that we look at is this right here. Right off the bat, I'm telling this dealer, based on purchased inventory, he has 41 units. He's -7 right now. Okay, what that means is if I look at their volume, they got 94 cars in stock. They've sold 40 in 2 weeks. They're on pace to sell 80 out of 94. So they're at a 43% sale rate, -7. If I look at just purchases alone, okay, he has 41 in stock, only on pace to sell 28 because he sold 14 in 2 weeks. That times 2 is 28. Okay, so he's 14 units off pace, or in a 2-week window, he's 7 units off pace. So the purchases that you're doing, not your trade-ins. I'm not worried about trades because, again, if I go look at trade-ins, they're selling basically at a 50% clip. It's my purchases that I'm worried about. So do I need to be out there buying more cars at the lane by purchasing more cars right now? You don't. Now, if you're going to purchase cars and wholesale and buy them from private party and steal them and then go wholesale them and whatever, I get it. But right now, this particular dealer does not need to be acquiring or purchasing more cars. Okay. I'm going to stop sharing my screen right now. And because think about it, what I just told you right now, his purchases are off pace, but what's the traffic going to look like come September? Okay, 45 days from now, the end of September. Okay, we're mid-August. That 1-day old car is going to be 45. That 15-day-old car is going to be 60 days old by the end of September. Remember, I showed you the shopper index drops. Our dealers' volumes drop as we go through this slower season of September, October, November, and December. Okay, so should I be out there acquiring more cars for my inventory when I'm 7 units off pace on my purchases as it is? Or should I slow down, get my purchases sale rate back up, figure out, is it a lead problem, a pricing problem, a photo problem? Is it the wrong inventory? Do I owe too much? Am I pricing it too high? Figuring out, is there just too many, late models in that purchases, and there's good incentives on those right now. So I'm going to have to get more aggressive as a market mover faster than I am. Those are the things that we help dealers find and point out. But right now, that particular dealer, majority, I would say, I have to guess right now because I don't have all of our dealerships, but I would almost guess a good at least half of them, if not more, if not 60+%, probably don't need to be buying right now. Slow that down. Now, if you can private party acquisition and you can wholesale and make money that way as retail sales, or do that. So hear me out. I'm not telling you to stop buying cars. Always be a buyer, right? Your gross is made on your purchase. So if you can be active and find some good deals, okay. But don't be just buying cars to buy cars because things are slowing down. So you figure if you throw more cars at it, you can pick business back up. That's just not how it works, especially when things are slowing down. Okay. So if you want more help, figure out how all the things I was just telling you, I can isolate purchase. I could tell you is that you got too many late models, you got leads you're not following up, you got too many high dollar stuff in there. We could analyze and pinpoint exactly what you need to be focusing on between leads and cars to get that sale rate back up so you can get back out and actively be purchasing. Because right now you're going to start seeing wholesales drop as the retail started dropping, and you should be able to be a good buyer. But right now it's squeezed. You still got to pay up a little bit, and retail prices are dropping. So there's a squeeze going on. But here in the next couple of weeks, you'll continue to see wholesale drop. You want to be buying at that time, but only be buying if your inventory is moving, if you're clean, and be that guy that can price his car $1,000 more aggressive than everybody else and still making $1,500 while the other people are losing $2,000 because they're sitting on cars they bought in June and July because they got busy in the summer sales event and stuff. Again, if this is helpful, go to lotwalk.com.